Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Monday, Macro Monday, big macro week, as I said on last night's video. Tons and tons and tons of data. PCE, GDP, QRA, J-Powell on the podium. So we have lots of reasons for lots of people to just take a pause here generally in the markets, and I think that's what we're seeing. Each week on Monday, I put together a piece on my thoughts for Canary Capital, where I am the head of trading. So just a quick plug for that. And I think the big thing to remember going into August, September, as I keep saying, as many people keep saying, seasonality tends to be more of a headwind than tailwind. So to see a lull in August and September would make sense. But again, in post-halving years, August tends to be more bullish. So we'll see what wins at the end of the day. But the important thing here probably is not to lose your mind over the next 2 months and just prepare for October, prepare for Q4, prepare for a post-Powell Fed, prepare for tariffs in whatever form to be behind us. Whether or not the consequences or results will be bullish or bearish, don't know, but the unintended or maybe intended uncertainty is definitely keeping lots of people on the sidelines. We also have rate decision this week. It's going to be no decision. It's going to be rates unchanged. And interestingly enough, the 2-year yield continues to be underneath rates, which you typically see in a environment that is tighter rather than looser on monetary policy. So regardless of what anyone feels or says, historically, looking at the 2-year relative to rates, we do not have loose monetary policy. Truflation's still basically flat at around 2%. We'll look at that. And CPI last month came in slightly above that at 2.7. Looking at flows for the week, globally, most of it was ETH, again, US, BlackRock. That's generally going to be the theme here. Some combination of BlackRock and US assets. Sol, decent bid. Ripple, decent bid globally. But again, most that's in the United States. So it's where a majority of people are focused on a day-to-day basis. Looking at BTC here, US Open started and we just started melting down. We're still in this range, have been in this range for a few weeks. I can't imagine we pop out of this range this week just based on what we have in front of us here. If we do, it's go time. If we don't, we wait for go time. I just don't think there's anything else to do here on BTC in some no man's land type territory. If we break 116 definitively and hold that level, I'd imagine we'd try to reach for 110. If Saylor comes in and saves us with his 2.52 billion, then maybe that helps push us back to 120. If we get to 120 without Saylor, that's best case, because that means there's actually a bid other than Saylor in the market. So I just think it's everybody's waiting for everybody else to make the first move, but nothing on the chart here really screams one way or the other to me as far as showing a bias. Looking at MSTR, it's been a little bit problematic. It's broken down quite a bit from that S&P inclusion rejection. I guess it would be the S&P exclusion announcement. Hasn't really been able to catch a bid. It probably ends up being fine, but much like anything relative to Bitcoin or relative to ETH or relative to Sol, if you still make money on this, but it's a 50% return relative to BTC, then you probably didn't make the correct decision at the end of the day, especially with volatility taken into account. So I think the setup is still there. It's definitely challenged. You know, you want this to curl up and not down, right? You don't want this making lower lows. I think it's fine for the moment just because BTC hasn't broken out either. But looking at some of this other stuff around the edges, it looks a heck of a lot better than MSTR, especially over the past couple weeks. In October 2024, MSTR had been leading everything, whereas here it's kind of lagging everything. Alts caught up, altcoin treasuries are catching up. A bunch of stuff's going on that's competing for MSTR dollars, but it needs to find a way to get momentum back or else it's going to have some trouble. This is BITU, and at least BITU has held in the 60s, whereas MSTR has seemingly given it all back. I like this on a higher high as well, maybe 63 if we can get it, but I would just chart regular old BTC and then use the leverage when and where you want it. WGMI, same deal, pulling back. That's kind of been the theme here. We've had massive run-ups, and as we'll get to S&P and SMH and Qs, like I don't really have any bright ideas left up there because this whole push was based on a bottoming fractal, a move through the cloud, And we've reached those targets. So the question is, what happens now? It's probably just chop and consolidation. Maybe until Q4. Maybe it's 2 months of touch grass, touch water, do something else with your life versus trying to force trades up here. This doesn't exactly look like a resounding continuation push on WGMI. I could see any of these charts pulling back to their equivalent daily key June, in this case 23. Perfectly reasonable based on where this came from, sub 11, right? Like all of this stuff could give back a little bit. If I had to pick one miner that hasn't broken out, again, it's going to be Bitfarms. This has nothing to do with the business, nothing to do with HPC, nothing to do with the buyback program, everything to do with the chart, the technicals. It has a W, it's through the cloud on the daily. A lot of these other miners, their equivalent price would be something at like 250 plus. They've already moved the equivalent of where Bitfarms could go on the chart. No clue how this does, but I'd rather be holding something like this in an attempt to push higher than holding onto something that is, mean reverting to the downside, whereas this would be mean reverting potentially higher. Coin is also not look so great, and it's not just MSTR. You might look at the MSTR chart and say, wow, this thing really hasn't moved, but looking around, coin is also down, 5 of the past 7 days as well, failing to break out there. These patterns, these broadening wedges, are generally a nightmare to trade, just because even at 325 back here in November, you could have said, oh yeah, this is it, this is the one. And the same deal here, we even broke out higher. 425, this is it, this is the one. And now we have this risk of pulling back somewhere in the deepness, the abyss of this wedge. Now, I don't think it goes sub 255, but the confidence in any breakout is gone, right? So where's your edge? Where's your actual setup here? I don't really see anything. You'd think this would continue, but it's got to pull up pretty soon or hold these levels, or it's going to threaten some deeper lows. Hood is another one, just in a vacuum, like which looks better here? It's got to be Hood. Doesn't mean I like the upside potential relative to coin. It's just Hood has held up a lot better. Now, like most of these charts of the cup and handle, they're sort of in their spot. And do fresh trades here make sense? Not really. Your risk reward, much better at 66 than it is at 106. Based on the chart pattern, based on the measured move. Now, this can continue, it can go way past the target, whatever, but just looking at this, you're running out of road on expected move. So I'd be careful on any assumptions with mega continuation versus Galaxy, which, again, on a relative value basis, starting to break out, has way more room, versus Coin, looks better on the breakout to me than Coin does, is also a crypto business on the NASDAQ. This chart just looks better to me. Galaxy has done what they've done, selling BTC, and it looks to be them selling today even more based on the wallets. Who knows whose BTC that is, but not helping us here on the BTC side of things. Nevertheless, the measured move here between 50 and 70. And even we'll throw PayPal in the mix. Haven't talked about this one in a long time, but it is above the 3-day cloud. It just hasn't gone anywhere, done anything. A lot of people asking me about XYZ Square, same deal. I have a hard time jumping back into this stuff when the technicals haven't done so hot in recent memory. It's had a decent breakout in mid 24 and then it gave it all back. So yeah, this could continue to some level that would make sense. They announced today that they're going to be taking cryptocurrencies on the app for merchants. They already have a stable coin, so maybe something crypto adjacent there, but doesn't really look amazing to me, and just a reminder that some of this stuff like Zoom could just go nowhere forever, right? It could just perpetually stay well below its post-COVID highs. Circle's another one. Does this look bullish? It's sitting at lows. It looks a little head and shoulders here on low time frames. It's not going to take much to negate the bearishness, but if you're in from 80, 90, 100, and it's at 186, and you're looking at this chart, are you a buyer or a seller? Especially in the short amount of time that this happened. SBET, same thing. A lot of these treasury companies are kind of on a multi-day drawdown here, which, okay, big deal, right? They just started trading. But if ETH is bearish and on the underlying assets in these treasury companies are mean reverting a little bit, you'd expect the treasury companies to mean revert doubly so. So maybe that's 15 on SBET. I don't know. And if you look at something like BMNR, this is already sitting at lows. Again, it's not going to take a lot to actually flip this bullish. There's pretty clearly a descending trend line here. So anything above 42 to 44, probably a great level. But as we sit here today, it's knocking on support, and that's never a good sign. So it's going to need something. These companies are going to need some catalyst to take them higher. If we look at everything together, this is Coin, WGMI, ETH, and IWM. So previously, ETH was a big laggard, right? And it caught way up to everything. This is, imperfect science, just relative correlations here. Coin, WGMI, and IWM both looking a little droopy. So it wouldn't be out of the question for ETH to pull back a little bit. We're not talking anything crazy, maybe 3,000, right? But if you're on 50x leverage, that's a margin call. So I would just keep in mind what's happening here in the group, in the highly correlative bucket, right? A lot of this stuff is slowing down a little bit. Got a lot of questions about BTC versus gold, how to chart that, what to use to chart that. I would use the legacy crypto settings on IBIT GLD. You don't see everything zoomed way out, but at least you're on the same time zones for opens and closes. And it's a decent proxy for what you're trying to look at. This still looks bullish. It still looks like bullish continuation. Little cup and handle action. And interesting, it's not back to its 2024 high yet. That just goes to show you how strong gold has been relative to BTC. And there's, of course, ETH A divided by IBIT, which is ETH BTC, also approaching a very important level. And up here, I don't have ideas, right? Like the idea was down here, okay, it's moving its way through the cloud. It's got a cup and handle. We can measure this. We are there. We are basically there. Now, this is still a decent move left, but if we're talking about fresh trades, buy, sell, or hold, you're getting closer from moving to the sell side versus the hold side. And I'd be very careful with buys up here just because you don't have a lot of room left. On the legacy side this week, again, we have tons and tons and tons of stuff. Employment, PCE, jobs, ISM. There's consumer sentiment in here. Tons of stuff. So any one of these data points could be enough to make the market angry. Who knows, right? We have Mag 7 earnings this week as well. Just tons of stuff. So I'd imagine most people are just kind of sitting on the sidelines waiting for next week where there's basically nothing on the schedule, right? You sort of know where we're headed after this week. Looking at rates, this is the probability for this meeting, 0% chance of movement on anything. Then we have Jackson Hole in August, and market's currently pricing in with a decent probability of a 25 basis point cut in September. But a lot can happen between now and September, obviously, to push this lower or higher, one way or the other. I'm not in the camp that we're going to see hikes. I think we're definitely ready for a little bit of a cutting cycle, at least until even until J-Pow is gone, right? I think after J-Pow we're going to see some ridiculousness, but even up until then, I think rates probably come down a little bit. Here's Trueflation. It's been all over the place, but it's hovered around 2%, and that's good enough. It's going to be pretty noisy relative to CPI, but it's not at 3, it's not at 4, it's not at 10. So we'll take it. CPI for this month, slightly higher month over month. PCE at 247. We'll get that this week. Core as well. This stuff sort of settling in. Is this close enough to cut? And we've talked about this for 10 weeks probably. Is this close enough to start cutting? Are we still not there yet? Is aggregate inflation the real problem versus the year over year data? If we go to aggregate, this is what people are revolting over, right? This is just crazy. Now, the problem is you can only keep restrictive policy for so long before you just get a flat out recession. So I don't think that's what we're going to see. But if you're being honest with yourself, rates here are kind of what we need to normalize everything. It's just, no one can buy a house, right? Because rates are way too high. GDP is still totally fine. In the mid twos there, we're going to get a final number this week. It's certainly not negative. And that is firmly in the no recession camp. Looking at TLT, IEF, SHI, AG, I like to look at these every week. Is there anything here that looks particularly bullish? No, not really. Now, if gold was bullish and these were bullish, and we're headed into bearish seasonality for crypto, and S&P hits its target, the Qs hit its target, SMH hits its target, and Mag 7 hits its target, then it would make more sense to me to just be default risk off here. But none of this stuff looks good either. The risk off bucket isn't exactly screaming buy me here. It all just has flatlined, which is fine. It doesn't need to be breaking all-time highs or anything, but it certainly is nowhere near recovering to its post-COVID levels. Here's the SPY hit a new all-time high last week. Even today might have hit a new all-time high. It's pulled back a little bit since. And again, we are pretty close to the measured move target on the inverted head and shoulders down here. Now that's still a decent move, right? A decent chunk. But if we're talking risk reward probabilities at this level versus 570, 580, it's a different conversation. So I would just be very careful up here. Would anybody expect this to go straight up for 3 months to reach the target? I don't think so, but always interesting when this stuff starts to materialize and play out. Here's the Qs already in its zone, 562 to 610. Certainly not bearish, but the opportunity cost or the opportunity just isn't there relative to where it was. And you could argue rising wedge on this. You could find ways to be bearish. It's just a tough ask up here to say, okay, now's a great time, right? After missing everything from 500 on up. SMH, same deal, firmly in its target based on the breakout, based on the measured move. I think this is also at an all-time high for the index. So it looks okay, it looks fine, but fresh trades up here, your money's probably better elsewhere in the moment until this stuff reconsolidates. And you could say the same for ETH, right? ETH hit 4K almost from 2K, and it's going to take some time for the selling to get absorbed. This is Mag 7, not quite to its previous all-time high on this ETF, but same deal. What more do you want, right? Even if you're in this anywhere below 50, below 45, my guess is we chop around a little bit up here. And even something like the home builders, XHB, like this still looks decent for a decent move higher, but there's plenty of other relative value plays that people are going to start broadening out into. And where they may get into trouble is if the leaders break down and mean revert, right? And then the laggards never catch up. And then you have this huge disconnection, just like BTC versus alts. BTC is down 1% today. Alts are down like 5 to 6%. So they need several multiples to catch up to BTC in the future. So lots of stuff going on this week. Probably not a smart time to be swinging your portfolio wildly around on any given news item. That's all I have for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.